All right, hey there. Good morning, everybody. Christopher Ince with Texas West Capital coming at you live here just a few minutes after 11 a.m. Central Standard Time on Friday. What is today? The 10th of February, 2023. Just north of Houston, Texas here, guys. H-Town. Good to have you all here. Hopefully you guys are doing all right. I see some comments coming up already talking about the Qs, Mara, other crypto stocks, Riot. I've got one I want to talk to you about as well, a crypto miner. So, everybody kind of noting the same thing, right? I've been talking about this idea that if we came down beyond, if we lost that local, which we'll look at here in a minute, the local range that we were at, then we'd probably be looking down toward the daily pivot, right? And there's something to that. There's something to that in terms of pivots and how price action usually happens. I'm going to cover all that and so much more in my Pivots master course that I'm going to be releasing here before too long. So if you guys are really interested in wondering how to use pivots to just help any type of trading system that you have, you can use them as a layer on it. And it will help you so much more with your confirmations, to your levels and whatnot. But be watching us on social media there, and I will give you a link where you can get it significantly discounted before we even put it on sale. So that'll be coming up. If you want to join us, you can do so at howtotradetowin.com/LMT. That's our mentor program. I have released two versions of one of my day trading systems that I actually use, getting amazing results for people, helping them figure out, where to exit, where to enter. I've got comments like, man, so I rolled this up and I made this money, but had I been doing it my own way, I would have gotten out prior, but I followed your rules and it went where it needed to, and I made that much more. So, again, trying to just make it easier for you. And, of course, with that, you get everything that'll be listed on this page here, including some other stuff we've got coming up. But we do have weekly calls as well. We've got Trade With Me sessions a few times during the week. Also, lots of stuff going on. We'd love to have you there, guys. You can also, that's right there, howtotradetowin.com/LMT. You can also, we're just about done with this, guys. howtotradetowin.com/T3. You can get our flagship Tier 3 elite level there. That gives you everything. That gives you 3 live streams a week of education, well over 300-400 hours of video education in that. You've got intraday daily chart updates. You got chart critiques to help you along as you're learning. You've got chart requests. I mean, just so much more, guys. Normally $200 month to month, guys. You can get it for $19.99? $19.99 for first month. No auto renew, 1 month. That's it. If you want to stick around, let us know. We'll offer you a great deal. But if not, no harm, no foul. You can move on. But just make sure if you're coming in, guys, you're really going to take advantage of that because we've got way too much content for you to kind of screw around, right? Don't waste your 20. It's just $20, guys. Don't waste it. If you're not going to come in and be serious and really kind of dive into it and absorb everything you can in that first month, then don't even do it. It's just a waste of your money. I'm not here to waste your money, guys. Okay? So we'd love to have you there. What do we got? Who's here already? We've got Nevlugian here, Spiral Architect, Christopher Archke. What's going on, guys? Jake can play. Hey, Jake can play. Haven't seen you chime in for a bit. Vibaswani's here. Brian Riley. Claudio, what's going on, guys? Oh, by the way, hey, if you guys noticed, I'm doing these short form videos. I'm really bad at them, guys. I'm just starting with them. But hopefully it's something of interest to you guys. We're posting them there on YouTube Shorts, Instagram Reels, even TikTok. It's not that I necessarily use all these platforms, but it's just that I'm trying to reach audiences that I don't normally reach with, with just Twitter, which is where we generally are, right? Facebook Reels, kind of all those different places. Hoping to spread the word and let people know, there is a right way and a wrong way to trade, and helping them out. I got blocked. If you guys pay attention, I got blocked by a certain... what's a nice word? Somebody who doesn't actually know what they try to say they're knowing. And we say that because I had been commenting for the past few weeks. They would constantly talk about triangles and double tops and all these things. And I kept commenting saying, listen, that's not what that is. You would need to do this. You can't do that because this is happening, Just trying to point out that it's not correct. And yeah, that got me blocked. It is what it is, guys. People want to get on. They got hundreds and thousands of followers, and they make a lot of money with their influencing. They don't really make a lot of money with their trading, obviously. with accounts like that. So, I mean, again, guys, whether you join us or not, I would love for you to join us. I think what we offer is absolutely fantastic. I think it's better than what anybody else does out there. But even if you don't, I hope you keep coming back, because I give away so much free information, so much free education if you're willing to stick around and listen. I mean, make no mistake, guys. I'm here to sell you something. I'm here to sell you what I do. I mean, I'm crystal clear about that, right? And sometimes people get offended by that. If you get offended by that and you want to leave, that's on you, But, if you understand that, I'm going to try and sell to you, right? But if you don't want it, that's okay. That's okay. You can still come back and get all this free, great stuff, guys. People seem to think that, oh my God, you have to come out here and not sell anything. Please, that isn't how life works, guys. But I'm being crystal clear, completely transparent with you here, right? I hope you guys get that. And I think you do, because it seems like the same people keep coming back, which is great. And we also, we get new people coming in, so that's also great. And if you're new, there you go. Being completely transparent to you there, okay? But, like I said, at the end of the day, even if you're not interested in buying, I think I can show you enough value that'll get you to purchase at some point. But I can't force you to purchase, right? But even if you don't, again, I give you a ridiculous amount of free content here that's going to change your trading life if you pay attention. Okay? So, let me see here. That's right, Jay. That's right. You're JWedo24 on Discord. That's right. But I haven't seen you log in with the Jake and Play here on the streams in a while. I haven't seen it anyway. Ryoshi, what's going on? Good to see you. Glad to have you here. Ilya is here as well. Fibaswani says a fraud. I don't know that they're necessarily like a fraud, like legit. They know that they don't know what they're talking about. I think they really think they know. And guys, here's the thing. We say that in a bull market, everybody's an expert in a bull market, right? Basically, what you mean is, in a bull market, price is going to keep going up, and you just have to keep putting higher targets, and you'll get it, right? It's the same thing in a bear market. Everybody's an expert in a bear market, right? The problem comes when those trends change, and they don't know what to look for, and they don't know how to understand that the trend may be changing, which is what I talk about constantly, guys. We talked about it up here, which got us all shorting here rather than trying to get up higher like everybody else, right? We longed here when everybody else was trying to get you to go lower, right? I mean, and so we keep talking about it, right? We say, okay, well, here's what may be happening. Here's why. I explain it to you. I legit go into exactly why it may be. Price action, volume, things that we look for, breakout levels that we're looking for, and why that would be important or why it may not. Man, it's crazy, right? So anyway, that's kind of where we are. Again, I don't think a lot of people online are really just, I mean, there are some frauds out there, guys. Don't get me wrong. There are, obviously. But I think a lot of your influencers aren't necessarily frauds in the sense that they're purposely misleading you. I just think that they really appear not to know what they're talking about, but they don't know that they don't know. Right? Because in a bull market, for instance, they were constantly higher and you'd eventually get there. In a bear market, they might have been constantly lower to eventually get there. But then you see them holding real strong to that trend change, or to that trend, even as the trend changes, right? You see them still being bullish up here and up here, and you see them still being bearish down here, right? And so, that's, you guys end up losing a lot of money following nonsense like that, right? You have to, I can't promise you, as I've told you from the bottom here, I said I can't promise you that this is accumulation happening here and it's going to be done. I said it looks like it, and I've explained for months, since last June, since the swing low here, right? Why I think this may be and what may be going on. Again, the main range, terminal shakeout. Terminal shakeouts create smaller ranges before they rally back up. I talked about inefficiencies. I talked about volume. I've actually literally explained why price would move up so quickly. Everybody's saying this is a scam on this move up here and it's manipulated. I've actually explained to you why it's not, why this moves like this, having to do with supply and demand, right? So, I mean, that's unfortunately the issue that you guys have out there. And I was having a short discussion with somebody the other day on Twitter who's blown some money, with a few courses and things from people, and they're really worried about finding a mentor. And they were asking me about my experience, guys. Again, as I think some of you know already, I started back in 95, lost a lot of money the first few years, right? Kind of just like everybody else, right? I just started in. I just knew I didn't want to work for somebody else. I had to figure out, how do I do it, right? So one is learning to trade. Two is, can I get this in front of the camera here, right? One is learning to trade. Two is actually starting a business, right? And I've done both of those. But it took a few years for me to finally sit back and go, okay, maybe I really don't know what I'm doing. Maybe if I'm serious about this, I have to really learn. And I had to get that ego out of me. Everybody has that ego when they first come in. Everybody thinks that just because they can trade, just because they can open an account and trade, that means they know what they're talking about, right? And you don't. I'm going to be honest with you, you don't. If that hurts with me telling you that, do what you need to do. But as long as you continue to live that life where somebody says, listen, this is the way it is, this is truthfully the way it is, and you want to just continue to argue against it and say, no, not me, not me. You're not going to get anywhere in life, guys. How you are in life is how you are in trading, period. You can't be completely victim and everything's, the world's against you and everybody's cheating you and all this stuff in life and expect to come in and make any money in trading because you don't feel like you have any control in your life. And if you don't feel like you do, how do you expect to be able to affect change and make money in the market? You can't. You can't, right? Does that make sense, guys? So anyway, that's what we go through here. If you're new, welcome. There's a lot going on here, guys. But I promise if you take the time and you sit through it, it's well worth it. But you got to be open. You got to be willing to think, you got to be willing to accept that maybe you may not know exactly what's going on. If you can't do that first part, none of the rest of it's going to make any difference. Okay? So, let me see here. Blaze, what's going on, man? Fiboswani says the Dunning-Kruger effect, cognitive bias. Yep, a lot of that there. For sure. You're guessing HUT is the other crypto stock you want to mention? No, it's not, but I might be mentioning one that you guys may never have heard of before, and that's why I want to kind of mention it. But yeah, I mean, HUT, Riot, Mara, all these things, guys, all these crypto miners, and then crypto stocks. So if Bitcoin, right? So remember, I've shown you this, right? This is the BLX here, the liquid index, right? And so the liquid index, is that weighted average, right? And so we've got this structure here, which I believe we are here. Okay? It's this structure right here, I believe. But again, that's because structures generally rhyme. They're not exact matches, right? They're not copies, but they rhyme, right? History rhymes. And so you get your same kind of structure set up here, right? Which is what we have. And remember, the one thing I talked about back all when we were down here was the fact that we'd probably rally up to the pivot, pull back, then break out the R1, pull back the pivot, and then break out higher, right? This has been from day one. This has been. And I've explained to you multiple times why that would be in terms of pivots, in terms of Elliott wave, right? So I think this is kind of where we're at. And this pivot right here is around that 26,000, 27,000 area, right? Okay? So again, my initial thought is we get this rally to finish up, and that gives us 5, right? It gives us 1, 2, 3, 4, and it'll give us 5 waves up. Okay, so that gives it. Then we'll get us a 1. We'll pull back for a 2. We'll break out for a 3, a 4, and a 5 to the R1. That'll give us a 1 R1 area, right? That'll give us a 1 up there, a 2 back down toward the pivot, and 3, 4, 5 continue up. Okay, so that's what we're looking for. That's regardless of the smaller term counts or whatever, that from day one has been what I've talked to you guys about was the likely larger time frame overall thing going on, right? So, let me see here. Dump it more? You says, I don't think so. Let's jump over here. Let's see. So again, this was the range here, right? And I said, if we lost this swing low here, I said, initially we're going to look right here at that S1 pivot on the hourly, which was the 22,200 level. I said, and if we lost that, we'd likely be down here at the daily pivot, which is around 21,200, right? So I've got this orange box target kind of here is what we're looking at. Now, this is the 1 hour time frame. You can see that we're building bullish divergence right now. We're getting higher lows on the oscillator while we're getting lower lows here in price, right? Here's the thing. If we zoom over here, look at this. If we jump to the 15 minute, that 15 minute is just above the daily. So coming in sideways between the pivot and the S1, we're breaking down. So we'd look to target the S1 and bounce up, that S1 area, right? It's right there in that orange box we're kind of looking at. Again, you've got higher lows coming up out of here, lower lows coming on the price, right? 4 hour is already reset down and oversold. Matter of fact, it's potentially going to have its own higher lows on the oscillator and lower lows in price right here, right? Because it's got another 2.5 hours to close, right? So we could see a finished drop down here and then a rally back up, probably a sharp move back up, right? Reset Stochc RSI. 12 hour, we didn't quite get there. So we're watching the 12 hour to see if maybe we might get into oversold. It may or may not make it. So, you know, it's not a big deal if it does another 6.5 hours. I mean, I guess we could see here and continue to just push down lower over the next, 7 hours or so and eventually get down to that orange box, eventually maybe take this down into oversold. Stochc RSI, as you can see, is almost bottomed out and oversold, or basically did here, and, going to curl back up, right? Cross bullishly. Can't even talk. And we break out to the daily. So here we are, the daily. There's our pivot, right? Daily showing this huge hidden bullish divergence here, right? As long as price stays above this swing low here at 20,370 cents here on Coinbase, as long as we stay below that and rally back up, that's hidden bullish divergence. We go up, right? Stochc RSI has been reset. We got a golden cross. If you're into that stuff, the blue line is the 50 MA, the red line is the 200 MA. So we got that bullish cross there. So we come down and then ride up with it. Sure, why not? Our friend Scott Melker there kind of mentioned the potential bearish cross here on the weekly. It has not crossed yet. So if we were to see this move down and then this rally back up by the end of the week, that would pull this back up and it wouldn't cross. So, again, we'll see. But, again, the idea is 1, 2, 3, 4, 5, right? I mean, that's basically the idea here. Give 5 up to here. And if you look across a lot of the crypto pairs, you're getting this same structure. You're getting this same 3 waves up to this area, and then, looking at a pullback to the pivot. As long as you're above the daily pivot, you shouldn't be looking lower. I see a lot of people are really bearish out there, like, oh, no, we lost this here. Oh, no, so we got to go to a new low. My God, people, this is a 60% rally here. Your first thought should not be, oh, my God, we dropped this nearby support here, so we have to go all the way to a new low. I'm going to be sorry, guys, but I'm sorry for saying this, but that's stupid. It really is. It makes absolutely no sense. Technically, it makes no sense. Emotionally, it may make a lot of sense, but if you're trading with your emotions, you're losing money anyway. So what the heck are you doing, right? Listen, guys, it can still go down lower. I can't promise you that it won't. But I'll tell you what, we've made a lot of money on this rally up because we weren't scared to jump in, right? Because we were noting what was going on here. So, if it does, worst case scenario, it does, we short it down some and we find another low, right? But the idea that you're so worried because you lost 22.5 that all of a sudden you think you have to drop down below 15.4 makes no sense. It makes absolutely no sense. The depth, the extent of this rally suggests that you should be looking for a higher low first before you ever even think about a lower low down here, because this rally has been so significant and the breadth of the rally has been so significant. So many different assets have rallied up with it, right? Not just with crypto, but also the same rally off the lows for stocks. You've had a breadth of them. It wasn't just a few that went up. It was a huge number that have rallied up well and made these new kind of moves, right? So again, to do it correctly, guys, just because you're breaking down below 22.5 here, which was barely below 24.2, right? It was like what, 10%? And if you think breaking down 10% means that you have to go back and give back everything since the November low, you're not doing it right. You're not doing it right. I don't know how else to say that, guys. Okay? But you're not. So you want to watch it, right? Let's see here. Andrew says Bitcoin was due for a pullback. It was, right? Yeah, no surprise. We had 2 scenarios, right? We said one is it continues to subdivide, and we're looking up higher, right? I said the other one, if we lose this 22.5, it means this is 3 and this is 4, and 4 has the target of that pivot area. It's just this support right here, which, guys, look left. Look left. Look at this dotted line. Look at what you're seeing there. That is all this resistance from June through November, and then again here in January. This is a significant area of support. So you should be looking for, in this, that's the high of it, but it's all sideways right here, right? You should be looking for price to catch in here and then rally up. That should be your default way that you look at it. It doesn't make sense to look at it any other way, technically. You can look at it the other way that, we lost this here, so we have to come down. That's emotional, but are you an emotional trader? If you are, I guarantee you aren't making consistent profits. I guarantee it. You can't, not by being an emotional trader. I've been doing this too long, spoken to too many thousands of traders, both good and bad, over the last 27 years, for you to tell me otherwise. You're lying. I'm going to tell you right now, I'm going to call you out. You're lying if you say you have. If you tell me you're an emotional trader and you're trading on emotions and you're consistently profitable, you're lying. Nobody does that. Nobody has. Oh, you just haven't seen anybody yet. Yeah, but I've got a heck of a lot of experience. It's not, guys. For some reason, everybody's got this world here where they think that just because they say something that it's valid. It's this idea that your ignorance is as good as somebody else's knowledge, somebody else's experience, right? And it's not just in trading, it's just in life, right? Everybody's out there. Oh, well, I have my opinion. Let's agree to disagree. What do you mean let's agree to disagree? If you're clearly wrong, what? You're saying, I'm going to hold on to my opinion because I had it? Rather than say, well, okay, yeah, I need to be open and yeah, I'm probably wrong on that. This is this big thing. This is a big thing we deal with, guys, in trading, especially in social media. People just beginning, and they talk as if they've been trading for decades. And they talk down to people who've been doing it for decades. Guys, here's the thing. Trading, you're not going to be a guarantee. There are no guarantees, right? You look at the structure and what's going on there, and you use proper risk management, and you go to trade, right? But here's the thing. Somebody that's been able to do this as a career for decades is obviously doing something right. It doesn't mean they're going to be right every time. But the fact that they've been doing it that long and been successful enough so that they can continue doing it should say something. But, people online, they hide behind animal avatars and fake names, right? You guys have to recognize this. And I say this because if you can't even recognize this in trading, how can you recognize it in your life? And if you don't recognize it in your life, you're really okay to be living a lie? Are you really okay to go out there every day? Because I'm telling you right now, so you're knowing this is true, and you're choosing to ignore it. Are you okay walking around every day saying stupid stuff and having people look at you going, what an idiot? Is that really what you want in life? All this is, guys, and this isn't to say somebody's right, something wrong. This is all just for you to change the way you view life. Because if you can't change, if that's the way you're viewing life and you're fine with that, then it's no wonder you're not getting where you want to go while you're so frustrated with life. Does that make sense? I mean, I've been fortunate, guys. Listen, I wasn't born with all this, okay? I've worked hard to get where I'm at. And there's things I've learned along the way. And a lot of it sucked. A lot of it was hard. A lot of it was hard to swallow. This acceptance that maybe I'm an idiot sometimes. That maybe I let my emotions get out ahead of logic. That maybe I'm the reason why I'm not doing better than where I wanted to be at the time, right? But you have to get to that point to recognize that before you can do anything about it. Otherwise, you're going to sit there and keep feeling that way, and all of a sudden you're a victim and the world's against you and you can't do anything and you have no life, right? But I'm here to tell you that isn't the way life is. Life really is what you make of it. And if you feel that it's that way, it's because you're making it that way for yourself. How you are in life directly affects how you're going to be as a trader. You can't be two separate things. It can't happen. Your mind is the same mind that works in life and in trading. It's not like you got two different brains going on there, guys. You have to get that clear. You have to figure that out. Because if you don't do that, then no matter what I tell you here, it's not going to change anything. That's the biggest, hardest thing to do, not just in trading, but in life. Anyway, okay, sorry guys, kind of get out there, but I'm really passionate about this, right? Because I was like that. Again, the way I am today, what I have accomplished, my current level of wealth, all this stuff is because I made those changes. And I've helped other people see that and make those changes in themselves as well. And then I've seen the results. So I know that's what you have to do. It's not an opinion. I'm telling you that's what it has to do, what you have to do. So that's what we're working with, right? Traded stones with the caveman, Andrew says. Hey there, Deadly123. Good to see you. Let me see here. Mark, what's going on, man? Good to see you as well. So, this is what we're looking at. So right now, I say the daily pivot. It's this area right here, guys, right? Now, what does this mean? Well, so here's an interesting chart, right? So I had somebody asking me, do I think that maybe there's an inverted head and shoulders going on here? Okay, that's the black here, okay? Should be a left shoulder, a head, and then maybe a right shoulder here, right? So I look and say, okay, well, if it happens, it makes sense, right? There's this high volume node right here around 19,000, 19,300 area, right? Makes sense to find support there. It's, as you can see here, it's there because it's this support level here, right? Look at this, guys. That area right about there is this, right? So, yeah, if we drop through the pivot impulsively, we can look for a target here of that daily S1 right around that, right? So you're looking at maybe 18.5 to 19.1 or so, right? If it does that. That'll fill in the gap that everybody's worried about, right? But here's the thing. This is just a weekend gap. Now, there are different types of gap. I've talked about this multiple times before. Weekend gaps are just considered part of normal price action. So they're not significant in that they must be filled in, okay? They just happen sometimes. It's the weekend, right? And it's going to happen here with the CME because Bitcoin's 24 hours, right? So there's nothing significant about that. If it gaps up during regular market hours, then there's something going on. But if it just gaps up during the weekend because price continues moving on a normal market and the CME is just not covering that market, well, then there's not necessarily the case that it has to be filled in, right? So I'm not saying it has to get in down here. I don't know that it has to. It could, and on the daily here, 19,550 would fill that in. So we could potentially get to the 19,950 there, or 19,550, and then rally back up, right? Possible. But here's the thing. So this right here is Bitcoin, spot Bitcoin with Coinbase, okay? So notice the difference. You had a lower low here at the beginning of November and a higher low mid-November, right? With spot, you had a higher low there at the beginning of November and a lower low mid-November, okay? So the counts are going to be different here. Now that gets interesting because if we look at the CME count here, it looks like it's a 1, 2, and then 1, 2, 3, 4, and we get a 5, right? Which would just give us a 3, a 4, and then a 5. Versus Bitcoin where we're saying, well, maybe it's 1, 2, 3, 4, 5, right? So that means that what's going on here might not even be 1, 2, 3, 4. It might be 1, 2, and then 1, 2, 3, 4, 5. Gives us 1, 2, 3, 4, 5. Gives us 1, 2, like this, right? So while there is the possibility that we could have an inverted head and shoulders right here, the problem is, with the black count here, right, is that if we did come down here, okay, maybe some deep 4 or something. Well, the problem is we get a 3 and then we get a 4 that drops back down into it. And if you drop back down into the neckline, it's not a proper head and shoulders. A proper head and shoulders should be a breakout that stays above. Sometimes it'll come back and retest it as support, but it's not going to break way down here and then back up and then break down again, right? Because remember, on an inverted head and shoulders, your pattern target is based on the height from the head to the neckline, right? At the breakout. So realistically, when it breaks out here, we should be heading way up here toward 41,000 before we even think about potentially popping back down below the swing low here, right? So what does that mean? Well, that means if there's going to be an inverted head and shoulders, it's probably going to be more like the red here, which gives us an inverted, or I mean an ascending neckline rather than a descending. And so you'll get, you know, your left shoulder, your right, your head, and then you'll get your right shoulder higher up here. So you've got like this right here, right? So you've got this ascending channel, and that makes sense, right? You guys are on the ascending channel thing, right? And so you just kind of get up here, and then you pull back to the ascending channel's EQ, which is just right here where you're getting all this support, right? And then you break out and head up, right? So I think if we're going to have an inverted head and shoulders, at least right now, it seems most likely that it would be to complete like 5 waves up toward this 29,000, 30,000 area, and then pulling back, and then breaking out. Because then that gets us then above this line, right? And so now we're looking at, okay, well, if that's the case, then the target, you know, maybe something like this here, right? Up here around 52,000 on the break there, right? If we go to measure that out here, got everything moving here. If we go to measure that out with, okay, so where would wave 3 be, right? So if we go, well, this is wave 5, upsets wave 1, wave 2 right here to 50% retracement, wave 5 right around 51,000 almost, just shy of that target area, right? So to me, that makes more sense. Now, can I guarantee this is going to happen? No. I'm not the idiot online guaranteeing you things are going to happen, because I know that if I do, you're going to listen, you're going to follow me. I'm not here to be an influencer per se, guys. I'm here to give you correct information. I'm here to help you think like a proper trader, which means you don't guarantee anything. That's stupid, because we're humans. We're going to make mistakes, guys. We're going to miss things. We're going to interpret things incorrectly. That's why proper risk management is the most important thing you're ever going to do day in and day out as a trader. We talk about that, right? So I think, you know, this kind of becomes interesting. If we look at this count here, right? This becomes interesting in terms of this. And so I've been talking to you guys about a potential extension, right? Not just at the 25 level and getting rejected, but maybe rallying up to 30 or even 40,000, right? And now we see how that could happen if we're taking into account this CME count, right? Which would mean this is just still subdividing internally here. Because notice right here, you got a higher low here on spot on Bitcoin, right? You got a lower low here on the CME. Over here, you got a higher low on the CME, and you got a lower low with spot. So spot, we're going, okay, well, here's 1, right? We're going, here's 1, 2, 1, 2. Here we're saying 1, 2, 1, 2. So yeah, I mean, it's possible. This could be 1, 2, 3, 4, and getting 5 for the 1, 2, 3, 4, 5. It's the only difference is this 1, 2, 1, 2, and this 1, 2, 1, 2. This is an interior going on here, and this is coming off slightly further over, right? But if this is 1, 2, 3, 4 here, it's compensating for the fact that we are 1, 2, 1, 2 here. 1, 2, 3, 4. You see what I'm saying? They both end up getting then to the same types of areas. So then we still look potentially up here to this high volume node around 29,000, 30,000. Does that make sense? Does that make sense? I hope it does, guys. I'm trying to get you off the nonsense that you see on crypto Twitter. Remember, most of crypto Twitter and social media, even your large influencers, are, oh, I saw this written online, so I'm going to repeat it. But there's no real understanding why, like gaps, right? Most people, maybe you even think about it, most people that are online in social media seem to think that just because it's a gap, it has to be filled. But that's not correct. There's like 4 or 5 different types of gaps. I've gone over them so many times before, right? And not all of them get filled. Some of them, you should all but guarantee they're going to get filled. A weekend gap is not one of those. A weekend gap is just regular price action. It's nothing special. It's not one of those other special types of gaps, right? So it may or may not get filled, but it doesn't have to like certain other gaps. And that's the thing. But, again, you don't see that, right? You don't see that online. You just see somebody saying, oh, this is what it is, and that's what it has to be, and that's all there is to it. And then that lie gets, continues on, right? So some influencer sees it online and says that, doesn't go into study anything or really try to understand it, doesn't have 10, 20, 30 years of trading experience, right? So they just repeat, vomit what they're reading online, right? And then you see it, and you're a newer trader, probably maybe even as new as the influencer that you're following, right? And you go, yeah, that makes sense. Okay, so I'm going to follow it. And then you go and you repeat this. You vomit that same stuff out there, right? And somebody else is listening to you, and then they vomit that same stuff. But just because you guys are continuing to repeat that same thing doesn't make it any more correct. See what I'm saying? So, yeah, you've got to, if you're going to trade, guys, you got to be serious about it. You've got to be legit looking to really understand. Otherwise, you're just going to put yourself in a bad situation. And you know what? I'm sitting here right now, and I know there's some of y'all that are right there going, whatever, Chris, whatever. Yeah, no, it's different with this me. It's different with me. It's different this time. It's whatever. Guys, I'm telling you the same things that repeat themselves every news cycle. You've always got new people coming in every news cycle. And if you stay in trading long enough and in enough different markets, you will see that you get the same people coming in over and over and over again. They were you when you first started. Hopefully you've moved beyond that and you've become somebody better as a trader. And if you have, then you'll notice these people come in and you'll be like, oh my God, I did that same thing. That was exactly me. I went through it myself. And if you look back 100 plus years, you'll just see it's the same people. That's why we can continue to teach the same things year after year and not be afraid that, oh my God, everybody's going to know how it works, so now it's not going to work anymore. Most people, guys, most of y'all don't listen. Most of y'all are too full of your own ego to ever learn. And I'll tell you what, if it happens in trading, it probably happens in your life. You're that person that always thinks you're right, right? Again, I'm not sitting out here trying to be disrespectful to you or rude. I'm trying to get you to look at what I'm saying and go, oh my God, yeah, because you have to. You can't possibly get any better if you're living that life and not acknowledging that's what you're doing and then change it. The first part, the hardest part is just acknowledging that that's what's going on. Most people can't ever do that. That's why they lose money in the markets and they cry about Wall Street stealing from them or whales or how everything's manipulated, because they never even got to the point where they admitted, okay, I'm full of myself. I've got a huge ego. I'm not willing to listen. So don't do that, okay, guys? My wave 5 around 29K would be a wave 5 of what? Like where would 3 waves down establish and the next 5 up? It's right there. I don't know what you're asking. 1, 2, 3, 4, 5. It's right down the screen. I'm not sure what you're asking there. Advertising ad for the Super Bowl. I don't even know what that means. Silvio. Like where would the 3 waves... Oh, you're asking where would the 3 waves down come? Well, again, toward this area here. Look. You see this right here? This? So this would be wave 1 up, right? Wave 3, we would initially look for the 50% retracement around 22,000. You can see that would probably get us right around the EQ of this ascending channel here, right? So yeah, if we were to get up there, I would look for right around 22,000, probably my initial target. That's also right around the wave 4 of the lesser degree. Remember, wave 2, we always look initially for wave 4 of the lesser degree. That's always our initial target. And it's usually a 50% retracement. You see how all these things kind of come together? Yeah. Chiefs, man, Chiefs. Got my boy Mahomes playing there. When I was in law school at Tech, he was the quarterback for Tech, so we got to see a few games with him. there at the Stadium at Tech. So, yeah, Mahomes is where it's at, man. What? Plus, here it goes, guys. I'm a Dallas Cowboys fan. Been in Texas, you know. So cheering for the Eagles would be like sacrilegious. By the way, I was a Dallas Cowboys fan long before the current issue here, right? I was a Dallas Cowboys fan. We had issues back in the 80s. And I was a Dallas Cowboys fan through all the glory years of the 90s coming into the 2000s, right? Continue to be a Dallas Cowboys fan into now. So it is what it is. But yeah, no, Mahomes, quarterback for Chiefs. So got to go with Chiefs, man. So after 22K, you would expect 5 more waves up? Yeah, if we get a reversal off that, yeah. So first target would be, if we got this 29,300, 29,200 kind of area here, yeah, my first target would be that 22,000. Second target would probably be this 20,000 area, and maybe even the 70.5 down here at about 19,200. Those would be the targets I'd look for on the pullback. If we can get a reversal off that, yeah, and you know, if we're coming down in 3 waves, we break out above that second wave. Yeah, I would then look for 5 waves up. So if it's here at the 50,000, that gives us a wave 3 at 45,355, and then a wave 5 up here at 50,840 without overextending. Now, the odds are we might get some overextension in wave 3 or something. So the target could actually end up being higher. But right now, if we look for wave 3 to hit the 1618, and then wave 5 to hit the 200% of wave 1, and we're getting the pullback there at the 50%, you know, that's where we generally expect to get to. Let's see, who is this? Diego says, I'd like a wick below 20 for a wave 2 pullback. Why? Now, I could see potentially like on a daily or something, I could see like a wick down, sure. And then back up. That's a pretty big wick down, though, to get there from basically 21.3 to, you know, reach down here at 19. What is that? 19. Close on the daily there. 19,550. I mean, that would be a heck of a wick. That would definitely scare everybody out if that happened. I would prefer not to see it. I just prefer to see a reversal right off this pivot area here and continue up. You know what's going to happen if that happens? All those bears saying that we needed to fill this in would not go long then. They would continue to stay off the market while it rallies up, thinking that it has to be filled. Life lessons are painful, right? You know, again, when you're trading, guys, you need to think, especially around pivotal areas, where is the most pain going to be? So right now, the most pain for traders has been this rally because they haven't longed it. They've been fighting it all the way. Emotionally, monetarily, they're trying to short every rally up along the way. Emotionally, not even getting in, missing, you know, 60% here, 200% and more on alts, right? That's max pain. Not going lower. Going lower is not max pain, guys. This right here, this rally is max pain. Because people are scared and they're not getting in and they're trying to short along the way. And they're losing money or they're not even making money. I mean, that's painful. It gets up here and they go, man, I should have gotten in down here. Well, yeah, you should have. This is max pain, not coming down lower here at this point, right? We've had 3 capitulations, May, June, and November. Why do they keep saying we have to have capitulation? We've had 3. See what I'm saying, guys? Not now? Oh, you mean after the 5th wave up, a wave 2 pullback? Oh, okay, yeah, I see what you're saying. Yeah. But I mean, you know, the high volume node right there. 19,001, 19,002, right? But, you know, this is all a high volume node here, 20 to 19. Nice bit of range should get caught in there. If you're breaking down below that, then you should be going. See, this is the area. If you're breaking down, I mean, we could say visually the S1 pivot on the daily right around, you know, that 18.7, 18.8 area. If you're getting below that, then you can become concerned that we're maybe heading to a new low. But until then, this is all high volume node here, which means it provides support. This is where the market's interested. And if you're above it, they buy. If you're below it, they sell. So as long as you're on this and not, you know, not getting back below it, you shouldn't be so worried about a new low coming in. Doesn't mean it can't happen, but again, you're looking at structure and the technicals and trying to figure out, well, what may be happening here. So yeah. Fibbo says this throwback to support pivot should bring the people that did not buy the first time and also bring the people that sold and want to rebuy additional buying interest. 25.8 target for him. Yeah. So 25.8. Yeah. Again, that's our, that would be that, this kind of thing here, right? What do I got? 25.837. So if this is 1, 2, 3, 4, 5, then rallying off here based on the height there, that gives us that target up there, right? Right around that area, right around that 25.8. Like I said, 837 is what I have there, right around the R1 pivot. But again, if we're doing that, look what happens here. This is, again, this is spot. This is Coinbase. Look at the 50% right at the pivot, right in the congestion here. So you get 3, 4 to the pivot, 5 to the R1. That's 1. 1 pulls back 2 to the pivot. And this would not get down here with 2 probably until next month, which means the pivots are going to change here. So yeah. Definitely someplace to watch, right? Let me see here. George, what's going on, man? If the Stoke printed across an oversold territory on the weekly, would you be concerned about price maybe being limited for more upside potential? If the Stoke, you mean just the regular stochastic, or do you mean stochastic RSI? Let me know what you mean on that. Sarang, what's up, man? How can Bitcoin go up when Fed says no pivot anytime soon? Sorry if you've already discussed it. Again, guys, stop worrying about the macro stuff. I mean, I'm going to be honest with you. There are too many moving parts going in there, and it doesn't matter what the Fed says. The Fed has said so many times, right? If you guys have been following me for years, I always call them out, right? What happened? Again, coming into 2022, right? Or back there in 2021, remember it was what? It was April or May? And they were like, oh no, we're not going to do rate increase until 2023 or something, and whatever, no QT until then, quantitative tightening, right? And I said no. I said November of that year, was when it was going to happen, right? And I was right. And I said interest rates are going to start rising, right there in the next year, right in the beginning of next year, and they did, right? I mean, the Fed always says it's going to do or it's what it's not going to do, right? And then it does something different. I wouldn't worry so much about what the Fed says. You guys have to understand the Fed is reactive. They are reactionary only, not proactive. And they can't do other than what the information to them says. And the information they use is lagging, right? Notice the tone, the change in tone from Powell in November and then December and then this last time in February. Look at this. If you haven't noticed, go back and read through his pressers after that. Listen to the Q&A session. Listen to him. This last time, he mentioned disinflation 14, 15 times. He hasn't said the word disinflation since before they started the 75 basis point rate hikes. That is a significant change in their overall view of the markets, right? The Fed often uses its mouth to get you to do something so it doesn't have to. The Fed wants an orderly market. Everybody's like, oh, the Fed's going to come out and scare people and do something completely different just to let them know the Fed's in charge. That is the dumbest bunch of malarkey I've ever heard, guys. The Fed doesn't want that. The Fed doesn't want the market freaking out. Because if it freaks out, it makes their job difficult. They need the market moving orderly. They're not going to try and surprise you and scare you and whatever. It's stupid. They're trying to manage your expectations is what they're doing. Which is why you see multiple Fed governors coming out after a meeting, some of them saying one thing, some of them saying another. It's to help manage what you think's going to happen so you don't overreact as much as they can possibly keep you from overreacting. So the market itself doesn't overreact. So their job does not become infinitely more difficult. Okay, guys? I hope that makes sense. They will follow what the market dictates, period. Yeah, agreed. So yeah, Sarang, I hope that makes sense. Yeah. Again, this is why people that even have, advanced degrees, PhDs in economics often get things wrong, right? Because they're going based on all these different indicators. You can always find something to support you, right? I've got a pretty big background in economics myself, but my macroeconomic understanding always comes from the chart first. I look at the chart and say, well, what is the chart looking like? What's that looking at? And then from there, I back into what's probably going to happen macro-wise. And again, if you guys have been following me since, 2018 or whatever, since I started YouTube there, right? Before they booted me the first time and took all my videos. You'll have been with me when I've always got the Fed right with its interest rates, right? My only real miss since 2018 was this past year. And I thought they were going to be done with the 75 basis point rate hikes at the beginning of Q4. I was a month off, right? Instead of coming into October, November, they did it in December. But my 25 basis point rate hike that I talked a year ago, right, about how that was going to happen, and I said they'd be down to 25 basis points by January of this year, and so I'm right on that. I was just wrong on how quickly, they stayed with the 75 another month or two longer than I expected. I thought they would ease into the 50 for a few months and then down to the 25. But again, it's based on the charts that we look at, right? That's why I always tell you guys, stop worrying about the macro stuff and all that fundamental nonsense. Learn to read the charts. Learn to understand the charts. Because you can do it. Everybody can do it. Whereas fundamentals, it's a lot more difficult. And you're going to get it wrong a lot more often than what you're going to get the charts wrong. Right? So, I would stick with the charts, guys. Yeah, Sarang, you're welcome. I hope that helps. SEC is the same. A laggard, prosecute after the fact, save no one. Yeah, great, Michael, man. What's up, man? Yeah, so that was one thing I wanted to mention, guys. I got a lot of people online because, Armstrong over there at Coinbase, the CEO of Coinbase, was saying, oh, well, it looks like the SEC is coming for your staking, right? And I see a lot of people online go, oh, no. The Congress has to pass this or that. Guys, they don't have to. The Constitution, and I'm telling you this from somebody who graduated law school, right? So I had to take con law in law school. And boy, I'll tell you what, that'll change your whole idea of the way things work. But Congress doesn't have to pass anything, right? So the Constitution gives the government the ability to create agencies that can carry out the law as they understand it. Now, you can take them to court, and eventually maybe it gets to the Supreme Court. The Supreme Court changes and says, no, you can't do that. That isn't what the Constitution says, okay? But until that happens, what the agency says goes. And we've talked about this multiple times in terms of the IRS, right? The IRS, if you ever here in the U.S., if you want to take the IRS to court, you can take it to district court, or you can take it to the tax court. And I'm telling you right now, for most things, you're going to want to, by default, take it to the tax court. By the way, this is not legal information, please. I am not a lawyer. I have a law degree. I have not sat for the bar. I am not your lawyer, of course. And, I have to say things like that because people go, oh, well, you said, and you've been in law school. It doesn't matter. I'm just telling you. What we noticed, I took many, many tax law classes because that was one of my areas that I was looking into. And generally, you're going to have more success for most things tax-related in the tax court. The tax court tends to be pro-taxpayer, not IRS. Okay? But yeah, IRS is just an agency, and it's an agency tasked with collecting taxes, while adhering to the Constitution, right? Now, Congress can come in and say, such and such is a security, and then it has to be treated like it doesn't matter what the IRS thinks at that point, because Congress said that's what it is. But Congress doesn't have to come out and say that. And until they do, it's up to the agency to decide. But you can always take them to court, the agency to court, and see what the court says. Does the court agree with you, or does the court agree with the agency? You see? So a lot of times people will take the IRS to court and they'll win the case, but there's no new precedent set, and the IRS will still handle things the same way, even though they lost that case. But it's the way in which it works. The Congress does not have to decide. If they decide and it's constitutional, then it becomes law. Well, if they decide it becomes law, if you argue against them and you take it up to it gets to the Supreme Court, the Supreme Court says, Congress, you're wrong. That's against the Constitution, so you can't do it. Well, Supreme Court has the final say. But until that happens, what Congress says is what goes. until Congress says something. What the agency says goes. Okay, guys, does that make sense? I hope that clears it up a bit with that, okay? Bashan, what's up, man? You really like the streams? Maybe a bit long? Yeah, it is usually a bit long, but that's because we do a lot of education here, right? A lot of discussion. I don't just force things on you and say, this is the way it is. You can't tell me what you're thinking. Because I could be wrong. You might see something that I don't notice. Or you may see it in a way that I didn't understand it that way until you said something. I'm here, guys. I'd rather be profitable than be right? So, I mean, that's what we're here for. But until then, of course, I'll continue to give you my ideas, right? By the way, I'm putting out short videos now, shorter form videos as well, with just some basic information stuff on there. So be watching for those. YouTube Shorts, Instagram, Facebook Reels, TikTok, stuff like that. So, yeah. We need to have TA court for some people on Twitter. That would be funny. Let me kind of catch you with here. George, you were asking about the Stoke RSI. If it crosses in oversold territory on the weekly, would you be concerned about price maybe being limited for more upside potential? If we go to the weekly, do you mean overbought up here like this? Or do you mean oversold down here? I think what you're asking, you mean overbought. And no, not necessarily. I mean, again, we do stuff like this all the time, right? Look at this right here. We crossed here and still rallied up here, right? As it finished, as it went on down, we continued rallying up. So not necessarily, especially on the weekly, which is such a large time frame. So things can stay overbought much longer on the larger time frames. That makes sense? I mean, I'd watch it, but I don't think that in and of itself automatically says, oh yeah, no, that's what's up. I mean, we can already look here at the volume here. Look at the volume on this big candle up, right? Okay, so it rallied up and then it dropped off here, smaller and then smaller. And then up here at the top, I mean, there's no significant volume coming in at the top, guys. I mean, it's significant in terms of, above this area down here, right? But at the top, look at how much volume is compared to here. There's not like some great selling going on. And the current one, I mean, we can't see with this stupid stuff here, but it's like right down here, right? Even less than what we see there on the follow through there. It's not like you have a whole bunch of selling going on at the top comparatively. You had a lot of buying going into it. But once you got to the top, all of a sudden, the volume's dropped off. So when we're looking for real distribution, like reversal distribution, we're usually looking for more volume coming in toward the top, right? But we're not seeing that. Same thing we see here. We saw the capitulations, right? All the volume coming at the bottoms. Bounced, right? Come here sideways, goes up. More and more volume, right? Candle spread getting smaller here and here, right? So, I mean, you're getting more effort versus less result. But up here, you're getting, it's just the volume's significantly less than what we saw rallying into it. So it's not like there's a ton of supply coming in here yet. So yeah, I don't know. I mean, if we're watching that, not overly too worried about it at the moment because it could just go sideways for a bit on that there. It looks like it needs to, I think it probably has to come up a bit higher. Again, anyway, you zoom in here, right? And we're above the daily pivot, right? So again, as I've been saying, the ideal is we rally up there, right? And so if we look at where's that weekly pivot, so this is the R1 pivot right here, right? Just prior to the weekly, right? Gets us right into this next kind of level here, right? So again, the idea is we find support on the pivot, rally up to the R1. This is on the daily, pull back to the daily pivot, and then break out above the R1 and break out above weekly here, right? And then you get up here around 40,000. Up here is this R1 area, right? So let's say we get up kind of this wave 5 up here, right? Look what happens. 50 to 61.8 right around the pivot. So again, you get the rally up to around the pivot area, pull back to the pivot, and then rally up higher again. The daily sets up the weekly. See what I'm saying? So that's what I'm kind of looking at there. So, I mean, yeah, sure, it could continue to go down. Sure, it could. But until it does, there's all that other stuff set up here. Right? And again, just got a bullish cross here on the daily. Golden cross coming up there. But we have this congestion right here at this significant area of support right here, right? This is the high volume node right here. So, yeah. Let me kind of jump in here again real quick. Let me see what else we got here, guys. DXY. DXY, right now I've got this as potentially A, B, C up here. Coming down here, this is kind of, I don't know, it could be like a 1, 2, 3, 4, 5 kind of thing. Or it could be A, B, C and break out higher here. If we're breaking out higher, the 70.5 at 104.212 is the next target, and then the 78.6 at 104.601 is the next target. And so basically that's the weekly pivot and the daily R1 pivot. Is what I would expect to see. And it would just say, okay, maybe wave 2 is still in progress here. If we can drop below this swing low here at the 38.2 retracement, below that 102.658 area, that should indicate that wave 2 is likely complete and wave 3 is headed down. Again, nothing's changed. Still looking for that weekly S1 pivot around 93, 94 handle right now. Overall, if we do kind of break out higher here, again, no big deal. So we're still below the weekly pivot. And, overall, there's nothing going on here. It's like people that see this going up here and they say, oh, it's got to go to 122 now. It makes no sense. It's the same people who say, oh, Bitcoin dropped down, 8%, so now it's got to drop down to new lows. It makes no sense, right? Could it happen? Sure, it could. And just because if it were to happen, it did, doesn't mean you were right in what you were saying. See, that's the big disconnect. You get people online all the time say, listen, this says this has to happen. And if it happens, they go, see, I was right. No, it went down. It went to that reason for, it went there for another reason. What you were saying was totally made no sense. But then if you're new and you don't understand, you come in, you go, oh, yeah, it makes sense. And then you wonder why you end up losing money following them, right? These are the issues. Any thoughts on the first ever weekly death cross? It hasn't happened yet. That's my thoughts. Let me see here. I don't even have it on here. Let me see. Let me put it on the CME, right? Right there. All right. On the CME, we'll do 50 again, as always, in blue. And then we'll do 200 as, the 200 is always in red. Let's see here. Even on the CME here, hasn't actually happened. So if I'm correct, and what I think might happen here, and we get this drop down to the daily pivot and then we rally back up, that movement up is likely to happen before the end of the week. So by the end of the week, this won't cross. If we're coming up from here, this is not going to cross. We're pushing back up here, right? And so maybe it takes enough time rallying back up here that it kind of pulls it up a bit. So when it comes down, and then at that point, it gets that kind of double kind of drop, double area right here, and then it doesn't really do anything. I'm not a big fan of crosses of the those of you that have been following me for a long time. I'm not a big fan of golden crosses and death crosses either, because they're so inconsistent, guys. They're inconsistent. Listen, the only reason these are going to cross is because this was going longer sideways up here. It's the only reason. That's the only reason why they would cross, right? Again, if we go here from the SEC or from the CME, let's go back over here to this right here, right? I mean, again, hasn't crossed yet, right? Same idea here. Hasn't crossed, and so you've got support here. You've got support here. If we rally up to here and then pull back to here, again, you got support here, you got support here, then you'll have support here. It doesn't make a lot of sense that it continues to draw further. Again, could it? Sure, but it doesn't make a whole lot of sense. I think it drops locally into support here. Again, your high volume node is right here. I'm not worried about further, guys, I'm not worried about dropping below here unless we're dropping below that 19,000 area. Then I'll start thinking about, okay, maybe we go lower. Until then, you know, your thought process should be up higher with just pullbacks along the way. Because this is the level that the market is interested in, right? This right here is another level. I mean, guys, look at this. High volume nodes. We have to get through the 19,000 level and the 16,800 kind of level here. If 16,500, we got to get through both of those before we can even drop down below the swing low here. But everybody, after an 8% drop way up here, wants to start talking about down here. And let's say it does happen to get down here, then they're going to be out there beating their chest going, look, I was right. That was the clue. That wasn't the clue, you idiot. Oh, that wasn't the clue, right? That was just the first part of, okay, it's going to pull back further right there. Then you got levels you have to watch. But see, if I don't get up here and say this, what do? You go and you listen to the nonsense. And you go and you believe them that they were right. And they just got lucky. See what I'm saying? Let me see here. Let me kind of catch up your questions here real quick. So yeah, so DXY, again, I don't see any reason for the DXY to continue to make any kind of new highs above, 115 or anything like that. It doesn't make any sense right now. Now that could change as information changes, over the weeks or months, but for right now, it doesn't make any sense. Again, the idea that you say, oh, we have this little bit of a rally, so all of a sudden it has to go to new highs, makes absolutely no technical sense. Okay? Let me see here. Let me see. Ocean USDT. I don't know that I got a chart on Ocean. I know I had one before. Oh, I got one here. Something. I got something. I don't remember doing this. Let's see what we got. Do we even have anything? Nope, we just have a chart. Okay. I mean, yeah, if I'm looking at this, I mean, my first thought is 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5. Could be like a 1, 2, 3, 4, 5, or a 1, 2, 3, 4, 5. So, I mean, just generically, that's what I'm looking at. If this was 5 up, again, I mean, I would expect to potentially reach this target right here, which is the 50%, if we were to come on down here. If this was 1, 2, 3, 4, though, I mean, it could still potentially get there. It's almost hit the 38 too. It looks like maybe it's an ABC. Let me zoom in a bit here. We're resetting down into oversold now. Oops, I want the 4 hour. There we go. All right. I mean, looks like 1, 2, 3, 4, 5. Maybe A, B, we'll get a C up, and then 5 more down, maybe. So yeah, I mean, I would probably look at that right there. Yeah, I mean, I would look for this potential to rally back up into this 48.50 area, maybe. I mean, it could even get all the way up here to 53. But to me, it looks like it's 5 down, which would suggest A, B, we'll get a C up for B, and then we'll have 5 more down, which could then potentially get down here to 35 here. If that's the case, I mean, again, that would be 3, 4, 5. It gives us a 1, 2. I mean, it would be in line with kind of what we're looking at with Bitcoin, right? So, yeah. Let me see here. See, just kind of catch up with you guys here real quick. That's Ocean. Coin. Well, you know what? I'll just do it like this, I guess. I mean, coin would be the same as Bitcoin. basically. I mean, if Bitcoin's hitting a 1, coin should hit a 1, right? Bitcoin's hitting a 3 of 1, coin should be a 3 of 1. Generally, I mean, that's what we should kind of expect, right? So we got this breakthrough here. Let's see here. Swing low at 31.55, swing low at 31.83. So here's the 1 here. If I'm just going to look at this real quick, I'd say maybe like 1, 2. And then maybe, well, 1, 2, let me see here, 1, 2, 3, 4, 5, 3, 4, 5. Yeah, I mean, we're getting stopped just before wave 1 here. I mean, I could potentially see something like this going on. Well, let's see here, if we're at a low here, it's stopping just prior to wave 1. So it's a deep 4, but looks like 3 waves down, right? Looks like A, B, C potentially. If this were to happen, it'd give us a 5 up here at around 106.96. How does that look as a wave 3 here? I mean, shoot. Actually, I mean, wave 3 is just, you know, if we go 1, 2, we stop just short of wave 3. I like all this overlap. You shouldn't get overlap in a wave 3. I mean, it looks like you got like a 1, 2, and then 1, 2, 3, 4, 5 gives you 3, 4, 5. So again, 1, 2. There's a lot of overlap here. I mean, this could be a leading diagonal, maybe. Yeah, I mean, we could be talking about some overextension here on this movement. But I mean, again, if we look here, it looks like 1, 2, and then 1. Let me see here. 1, 2, 3, 4, 5 gives us 1, 2, 3, 4, 5 potentially. And so we get a 1, 2, 1, 2. And we can go 1, 2, 3, 4. I guess that's stopping right below it. I guess that's not an overlap there. So 1, 2. Oh, wait a minute. We got a dip right here. 1, 2. I don't know. 1, 2, 3, 4, 5. Yeah, I mean, I think maybe, you know, we might be at a 3, 4 here, which gives us a 5 around that, again, around that 106, which gets us above what, you know, generally expected wave 3 would be. So, I mean, rallying up there, we got to get above this swing high right here at $73.95 to kind of, you know, to add confidence to it and say it's heading up. But my next target up would probably be that 107, 106 and a half, 107 area for potentially this wave 3, which will get us right around this supply structure that's actually in this wick right here. So you would expect a rejection in that area. So that would make sense. But again, you know, if we look at spot Bitcoin and we look at spot Bitcoin versus the CME. And so the CME may be suggesting that we have that little bit different count going on with spot, which gets us a higher rally. And we look at coin here, and coin looks like it's got, a more extended count as well. I mean, yeah, so I could definitely see us potentially heading beyond 25 to 30 or maybe higher. We would just have to play it as it goes, Let me see here. So I guess they're about 125. Maybe that 125 area, maybe. But there's I don't know. I'm not so sure about that count right there. If I look at it, a lot of stupid overlap. So you got 1, 2, 3, 4, 5. 1, 2. 1, 2, 3, 4. 3, 4, 5. Right? 2. I don't think that's 1, 2, 3, 4, but it's acting like it wants to be. But yeah, I mean, I would just look for some rally from here to rally up above that swing high there, and then we'd look up toward that target, toward that 106, 107 target area. And then from there, maybe we can kind of come back and say, okay, is there something different maybe playing out there? But this looks like 1, 2 right here. The dip back, into that wick there for 1 suggests, I mean, maybe it's a 1, 2, 1, 2. But even if it's a 1, 2, 1, 2, you're still going to hit at least the 107 level. If it's a 1, 2, 1, 2, you're going to hit much further than that. So yeah, not overly confident in the count at the moment, but breaking out above that swing high there will get you that move up toward that area. If you can break out impulsively above this descending resistance of this channel here, it should give you a target of that pivot at least, the 72 area at least. And then again, you're breaking out through that level should then get you that 107. And that could at least get you going for a bit, right? Big picture, you talk about a blow-off top for cryptos. Does that mean an 80 to 90% retracement after an all-time high for Bitcoin, for example? Yeah, so, normal Bitcoin retracements, are going to be that 80, 90% kind of thing, right? If we're talking about a super cycle top with risk assets, with stocks and whatever, yeah, you would expect Bitcoin to generally be down for quite a while because it still operates as a risk asset, right? I mean, it's if it's risk on, you're losing, usually the price of Bitcoin's dropping, right? But yeah, I mean, I would expect to see a big move down, sure, changing that. Now, can the narrative change for Bitcoin? Can there be interest in Bitcoin in some kind of depression going on? I mean, I think so. And one of the ways I would see that happening would be because I would expect it wouldn't just be like a U.S. kind of depression thing. I think it'd be like a global depression. And we've talked about this before. I got to get going here, but we talked about this before. When there's depressions and whatnot, right? When the economies pull back, that's when governments tend to put out more restrictive laws, right? So if we think about this as being potentially the end of the credit cycle, and then we get some depression coming after that, right? Some big move because depression, right? Government should be expected to step in and create more difficult laws for people, right? Of that, maybe they create something that makes it difficult to hold dollars or to transact business with dollars or to get dollars, right? So at that point, the populace then, and again, it's not just in the U.S., you see it over in Europe and everywhere else. And so citizens then maybe start hoarding things like Bitcoin, right? Because it's this alternative to their system. The government's making their system difficult to get, right? They got bills, they got foods they want to get. And so they kind of move to that shadow system, which is Bitcoin and stuff like that, right? That's the way I would see that Bitcoin would come up in some sort of depression coming thing, because again, the idea is that if we're heading into a depression from now, it would be because we've got the end of the credit cycle. And so that has a lot of connotations that has to do with money and monetary policy and stuff like that. And again, governments tend to become more restrictive. They become their policies become looser as the economy is really productive and doing well. But as the economy pulls back and starts doing worse, governments tend to become much more restrictive. And so if that restriction then makes things difficult to deal with your national currency, I could see where people then start dealing with cryptos to get around that nonsense. And so that's the way that I would see maybe that crypto would come out ahead, even in a depression type situation. I don't know that there's another way that it really would make sense to come out. It would have to be some alternative. There would have to be a big reason why people would jump to it, just in general. And I think that would be the way. It'd be government causing it. Yeah, hopefully that makes sense, guys. Take care, Fibbo. So yeah. Let me do gold. Let me see here. I've still got a couple of different things looking for gold. Kind of taking the look that maybe overall we might be heading up now instead of down lower. I've talked about that. So remember, my account originally is this idea that we got this 1, 2, and we're heading down lower, right? But with this rally here, it suggests that maybe this may be an ABC as a flat correction. And again, this is what I've talked about before. This would be 3, this would be 4 as a flat, and we'd have wave 5 going up. And that would be in line with some other things happening, right? So right now, we've just pulled back to the daily S1 pivot. Let me kind of get some of the stuff off here. And, basically it looks like it's in 3 waves. So if we can see a rally from here that breaks out above this swing high here at 19.02 and 30 cents, really above that daily pivot, I think we break out higher. Based on this right here, you'd have at least a target of, 20,046 or so. And that kind of aligns with what I'm looking at here. I'm looking at this as a 3 and a 4 and a 5. So of 3 right now, potentially off the low here. Instead of it being bearish as a 1, 2 and heading down, because of the extent of this rally here, I think that may be, again, the idea that this is 3 and this is 4 and this is a flat correction. And now we've got, working on wave 1 of 5 now, rallying up. I'm looking at there. Let me see here one more time. CQT USDT. I don't know that I've got a chart on that. I still got to get used to that all charts thing. I do have a chart on that from the 15th. That's crazy. I don't remember doing this. No, this must have been 22, right? Yeah, it's 22. Okay. Woo. All right. Let's see what we got here. So we had this big low down here, right? See if we can kind of move this out a little bit here. I mean, if I look at this, I go 1, 2, 1, 2, 3, 4, 5. It's just 3, 4, 5, right? 1, 2, 3, 4, 5, maybe. Yeah, so it looks like maybe a 1, 2 here, and then 1, 2 here. Zoom out a little bit more here. Just make a new, I don't want to make a new copy here. Let's see. So here's the big thing. I think that's the big thing right there. Not only did we get the breakout, then we got the retest, and then we're getting the rally back up. So if I'm looking at the weekly here, this actually looks like a 1, 2, 3, A, B, C, D, E. 4 is a triangle, maybe 5 done. And so, yeah, 1, 2, 3, 4, 5. Triangle in here for wave 4. And then potentially being 5 done up there. And if it is, you know, we pulled back 50% already. 70.5 gets you down here. So that would be my next target. Would be that, looks like 10.5 cents or so. If we continue down further there. It's definitely an ugly candle. And then look at that. Yeah, I think we got to get down there around that 7. We might even get to 78.6 here. But I mean, I guess it could potentially find support here, but I think it comes down further. I think we look at least 61.8, maybe 70.5. And that puts us wave 5 up here close to that R1 pivot. And so even if we just get it right here around 50 cents, see how it comes right here at that resistance support level? See right here? Resistance, support, resistance. So where did we say we pulled those? We said 70.5 here, right? Yeah. We go 3. We go 4 at the pivot. I mean, that's such a perfect thing there. I mean, look at that. I mean, I think that's kind of what we'd be looking for here, right? Does that make sense there, Michael? I mean, that's kind of what I'm looking at here. So I think 1 may be done, 2 may be in progress, potentially down to 10.5 cents, which then see, you know, 1, 2, 3, 4, 5 up here, close to around 50 cents. And at that point, it should just pull back to, what is that, about 30 cents there for wave 2. And this is all just generalization if it hits these general levels, right? I mean, we got to wait to see actually how that happens. But that then gives you a 3 up there at $1.04.5 and a 5 at least at $1.22, right? Near the top. Now, there could be overextensions along the way in there, but, you know, just based on no overextensions, that's kind of how it would seem that it wants to play out. Like that. So anyway, there you go, guys. All right, listen, I'm running over here, so I got to get going. I appreciate you guys showing up as always. I know it's long, but, you know, if you have the time and you hang around and you pay attention, you should be picking up a ridiculous amount of, like, legitimate trading education here, guys. This isn't, hey, I'm some guy that just started, you know, last year and I've looked online and I've never been through the trenches of multiple bear markets and markets, you know, in across multiple markets, you know. This is somebody who's been doing this for a really long time, across, you know, FX, legacy, metals, oil, crypto, you know, trying to share my thoughts and, you know, my wisdom with you guys of what I've learned. So I really hope that comes across. Hopefully you'll check in next time. I'll be back on Tuesday, 11 a.m. Central Standard Time. Like I said, you can join us there at howtotradetowin.com/LMT for our mentor program or /T3 for our, we're just about done with it, our 1 month of Tier 3 access, normally $200 a month. Get it for $19.99, 1 month, no auto renew. That's it. It won't keep you in it, but take advantage of it, all right? At the end of the day, guys, risk management continues to be the most important thing, right? It is the most important thing you will ever do as a trader day in and day out. The only thing you control in the market is how much you lose. That's it. So beyond all this, the one thing you should work on more than anything else is your risk management, proper risk management. All right? All right, you guys take care. If you're in the mentor program, guys, don't forget we've got our discussion there at 1:30. So that's about an hour from now. We'll see y'all then, okay? Everybody else, take care. Have a great weekend. Trade safe. See you next week.